It's awesome. Well, so hello again. We have today Mona uh, on our next episode for Building the Open Web. Thank you for joining today.
Thanks for having me, Sasha. Great to be here.
Maybe we can start with a brief introduction. What have you done? What you're focusing on today?
Yeah, sure. My background is originally in traditional finance. I started my career straight out of university and hit the trading floor of Goldman Sachs, aged I think 18 or 19, and spent nearly a decade there working on the trading floor, market making and prop trading across market making in cash equities, but prop trading across all asset class. So everything from cash equity to derivatives to commodities to options to credit derivative swaps, etc., etc. So it was a pretty fun ride. And in 2011, I got an offer from one of our clients who ran a large European hedge fund to go work for him, Jabber Capital in Geneva. And that was my first move into into Switzerland. I'm still here, nearly 10 years, 10 years almost exactly to the day on. And I ran a long short equity portfolio for Philippe Jabber in Geneva for 4 years until I was given an opportunity by a family office to launch my own long short equity hedge fund seeded by them. They offered me $20 million seed capital. I jumped at the opportunity, as this is every kind of young trader's dream, to eventually launch their own fund, I think, or at least many traders' dream. And it was a bit small compared to what I was used to managing, but I very confidently thought I can do this. I'm a hard worker. I can grow this as a business, etc., etc. And proceeded to have one of the worst years of my life. I was totally wrong. I was not prepared for what was coming in terms of the barriers to entry in the hedge fund space, the operational and administrative complications and nightmare. It's anything but simple and built on very, very kind of archaic infrastructure, making the manual kind of labor intensive processes very, very time consuming. And after a year into that, I was like, this is really not sustainable. And I was also really kind of, how can we be in the 21st century and everything seems to have been disrupted by tech except finance? So I decided to take a year out, close the fund, take a year out. I didn't really want to go backwards in my career, like going back to a big bank or going back to a hedge fund. So I just decided to take some time off. And yeah, 2 months into my time off, I started to kind of get a little bit obsessed with Bitcoin and Ethereum. It started by reading an article on a beach, and then yeah, led to one thing led to another, and before you knew it, I was on a plane back to this time to Zug, to Crypto Valley, and immersing myself into the space. So once I kind of understood tokenization, blockchain, Ethereum, etc., and really kind of fundamentally believed, I took a view very early on that tokenized assets were the future and that everything eventually would have a tokenized share class. Then it was pretty, kind of consistent after that, that if you believe everything can have a tokenized share class, then you can also automate all of those complicated processes that I had faced when launching a fund in the asset management space, and automate those all that complication and headache layer in by using smart contracts. So that was basically the beginnings of Melon.
Interesting. How did you come to a realization that this is possible? Like, how long did it take you to understand that, like, how tokenization works and what's possible now in this new world of crypto?
So I was like completely clueless coming into the space. Like I had no tech background. I studied economics and statistics at university. I spent 14 years in finance, traditional finance. We had kind of technology support everywhere I went. So never really, technology wasn't my thing. And I have to say, like coming into the space felt like very intimidating, not having had a tech background. The first thing I did was when I got back to Switzerland was sign up for the Bitcoin meetup in my area. Well, actually, it was the only Bitcoin meetup. It wasn't like the one in my area was the only one. And and basically back then it was like 10 people in Switzerland roughly that would meet every week in a cafe that was the only cafe in Switzerland that accepted Bitcoin. And they would just talk about Bitcoin, but they were all technologists. They were all super, super, um, you know, smart software developers. And so I show up in the first session and I'm, the only girl and the only kind of totally non-technical person. And the first thing they said to me was like, sorry, I think you're in the wrong place. This is the Bitcoin meetup. And I said, no, this is exactly where I want to be. They all kind of rolled their eyes and looked at each other. And I just kind of felt, for the first time in my life, very out of place. And well, for the first time in my career, I guess, and I just quietly sat down and tried to listen to everything going around and all of these big buzzwords going around me. And I understood none of it. And this happened, I think, 3 times, 3 weeks in a row. So on the third week, when I was in this cafe, being completely ignored, literally just listening to words, writing things down, and then going home and trying to make sense of like random sentences I heard during this meetup. One guy turned around to me, Andre Volke, who is still around in Crypto Valley, and the founder of Validity Labs. He turned around to me and said, look, I'm just going to ask you what everyone here is thinking. Who are you and what do you want from us? So I basically, like very Swiss direct style, turned around and I kind of told him my story. And I said, look, this is me. I just like kind of closed my fund down after doing X, Y, Z. And I don't really know what to do now, but I'm finding this space really, really fascinating. And I just don't know how to learn about it because I'm not a technologist. And there was no documentation back then either, like very poor, there was obviously the white paper and a few Reddit posts and stuff, but there wasn't much. And so he's like, wow, he's like, that's really fascinating. You never had someone with your experience come to a Bitcoin meetup. And he was like, this is a sign things are changing, finance people are starting to care. So he suggested to me, he made a recommendation which kind of changed my life really. And he said, look, I work with a lot of students from ETH University and beyond. And, they're sort of young guys or girls who are super smart. They're super smart technologically, and they're working on startups in the blockchain space, but they have no sense of business, no sense of finance, etc. So what if I connect you to them and you can kind of mentor them from a business perspective, and then they can sort of teach you and answer all of your questions on the technology. And so basically that's how it started. That was early 2016. My dining room turned into sort of a mentorship hub, very informal. And basically, yeah, that led me. One of those guys he sent to me ended up being the co-founder of Melonport.
Wow. And so was Ethereum already becoming a thing at that point in time, or was it all about Bitcoin?
Yeah, Ethereum was definitely becoming a thing. Yeah. I mean, smart contracts were starting to blow people's minds. And for me, it started with Bitcoin. And then the next evolution was, the next discovery from the Bitcoin meetup was Ethereum. And I was like, this is huge. I mean, smart contracts, can automate so many things. It was really mind boggling. And, it was one of the sessions when I met Reto Trinkler that we started talking about what this could mean for asset management. And, and that the rest was like history. Melonport was founded in July or August 2016. And, we did one of the very first ICOs in February, or token sales, I should say, in February 2017. And yeah, it's kind of I've never looked back since.
And how did you? So one of the team members you mentioned you found right there. Like how big was the founding team at the time? And how did you go about assembling the initial team?
It was just me and Reto initially for months. And, we both worked really hard. Him on the development side of things, like kind of coming up with a minimum viable product, and me on the everything else side. And we came up with a name, we came up with a social media narrative, a white paper, all of that stuff. Took weeks and months, and we I don't think we even made our first hire until we did the token sale. And our first hire was, things were, our Twitter community, when we did our token sale, we had 80, I maybe exaggerate slightly, but when we did the token sale, I think we had about 80 followers on Twitter. And when we kind of announced it, and then sort of since then, it was just a snowball effect after that. So, I remember we made headlines at the time because token sale sold out in 2 minutes. And like at the time that was like a new record. And basically, yeah, it was cool. But then, we raised, I think it was $2.5 million. We aimed to raise in the first sale. And that was it. We sat there and we said, okay, we have the money now to start building a team. And our first hire was George Hallam from the Ethereum Foundation. George used to run all the communications of the Ethereum Foundation and had taken some time out. And, he was somebody that I'd met in a lot of the UK British meetups in London. And, and we kind of clicked immediately, and he was our first hire. I think he was there for the actual sale. And we were in, a tiny little office, the old office of Bitcoin Suisse, which has now obviously expanded massively, but it was before they were just big, in Bar. And it was a very memorable moment.
And you were at the time, so you were like full time living in Switzerland, or you were
Yes,
moving around?
I was at the time full time living in Switzerland. I've now been in Switzerland for nearly 10 years in total.
And what was the initial focus for Melon? Like, what did you identify as kind of like main thing to focus on early days?
Yeah, I mean, for us, the real kind of focus was automation side of things, like really building the first, like we always saw ourselves as building asset management infrastructure and building something that is automates the painful fund administrative operational compliance functionalities that people have to deal with and that just cause complication in the fund manager's everyday life. And those processes, they might, I mean, basically, they sound really boring, right? And that's actually quite kind of the point. We do all the boring stuff that nobody else wants to do. And so, or Melon does all the boring stuff that nobody else wants to do. That's what it was meant to do from day one. So it basically empowers and enables the fund manager, to focus on the fun stuff, like finding the next investment opportunity, trading, discovering the trade, researching the trade, etc., and following his or her passion, and basically takes care of everything else. And that infrastructure layer is really what's important for helping establish trust between the manager and the investor. So if you think about DeFi in general, all it really is helping automate or it helps establish trust between market participants. So when you think about a DEX, DEXs enable buyers and sellers to trade with one another without necessarily needing to know who the other party is, right? Because you don't have to worry about settlement. You don't need a settlement layer. You don't need a custodian to transfer the assets. You don't need proof that somebody has sent payment. It's all embedded in the infrastructure of the DEX. Same with borrowing and lending protocols. It helps establish trust between the borrower and lender through automation that's embedded in the smart contracts. No need to have a bank to check, if you have a good credit line, or someone to enforce that you're going to pay the debt back, etc. And same with Melon. Melon is all about helping establish trust between the fund managers and the investors in those funds, making sure that the fund managers can't do all the obvious malicious activities that they could do. Example, like spend the money that they receive on a yacht instead of investing in U.S. equities or tokens like they're supposed to, or just kind of maliciously spend or use the funds, or just break promises that they've made to investors. So we really try to automate as much of that as that is possible in smart contracts to kind of, it's impossible to have a perfect solution, but we try to do as much of that as we can. So long-winded answer to say, yeah, we were trying to empower the fund manager to focus on their passion.
And what was the initial response of the fund managers? Were they pretty keen on the new technology, or was it a lot of hesitation?
That's a great question. So there was a ton of excitement, as you could probably imagine, in 2017 and 18. But we didn't really hit mainnet. We didn't hit mainnet until February 2019, aside from a little competition that we did for testing purposes that we conducted. And the excitement of the idea, the excitement around it was huge. When we actually launched to mainnet, though, it was a little bit of an anticlimax. There was maybe it was also the timing. Like in February 2019, it was a little bit like DeFi wasn't in vogue at the time, or as much as it is now. We really, one big mistake or one big thing that we didn't do well was, the UX UI for the first version was terribly unfriendly for users, very clunky, a lot of steps, very slow, very buggy. And And so, the first kind of splash we made was unfortunate, like, because the UX didn't do it justice. And so for a year or so, we didn't really see any traction. And then, yeah, and at the same time, we had decentralized the protocol as we promised we would do after we launched V1. So I think we became the first DeFi history in history, DeFi protocol in history to decentralize our governance. And we handed over to governance to a DAO, user representative and technical DAO, a kind of consortium like DAO. And basically, that was it. Like, we'd given up what we had built, and it was now in someone else's or some other in a DAO's control. And so, what next? So it was pretty hard to kind of, meanwhile, Melonport was being wound down, and our kind of first reaction was, let's take a step back and see what the rest of how the ecosystem reacts, what the feedback is, etc. So we did that for a few months, and in August, September last year, I came back and set up another company called Avantgarde, and basically Avantgarde decided to put forward a new roadmap to the Melon Council, so to the DAO, and say, look, these are the reasons we think that traction isn't growing in the Melon protocol. The first is UX UI. The second is lack of integrations. DeFi was starting to pick up at that point. When we started and we published our first roadmap, the only DeFi protocols were like Maker and Kyber and 0x. And now, you had lending protocols, you had options protocols, derivatives protocols, synthetic products, all of this kind of stuff started to emerge. And so it made sense that we would evolve Melon now to be able to handle all of those new kind of, the new asset layer that has emerged. And so ever since we did that, we've basically started to see growth in the usage. We made our first big release in February this year, dramatically improved UX UI, although still not, personally still not very happy with it. I think it still needs to be a lot better. But in terms of where we were a year ago, definitely huge improvement. And it was since then that we really started seeing some interest and some user excitement and some user feedback and frustration, of course, as well, as you always get. But this has really helped us refine for our upcoming V2, where we're really focused right now.
I see. And Avantgarde, is it fully then built on Melon, or is it completely different piece of technology?
Yeah, so Avantgarde is not a product; it's just the name of our company. We are building on Melon. It's everything we do is or will be open source. Everything we do for the protocol roadmap will be open source and available for everyone. And basically, there is probably there will be a component of Avantgarde that also builds other products, but the main focus we have right now is executing the roadmap and trying to unlock any blockers for users by making the integrations possible, improving the UX UI. Now managers are asking for more sophisticated things like newer types of strategies, like yield farming strategies. They want strategies that can be LPs in automatic market making pools. They want staking funds. They want all of this kind of stuff. So our primary goal is to make sure that all of that, those integrations are natively integrated into Melon, so that managers can literally spin up a DeFi product in seconds instead of building it themselves from scratch.
And what is your job now? Is it expanding the base of different asset managers, or educating them on all kinds of things DeFi has to offer, or is it all of the above? What do you focus on?
Everything, I'm much more involved now. I work pretty closely, more than ever recently, since about March, April. Since April, I work much closer with the tech team. Now we just have a much flatter structure than we ever had, and it's working really well. I am involved in, negotiating with, various projects that we're working with, collaborations, integrations, research. We've done a lot of research in terms of how we expand the asset universe, the reliable oracles out there, layer 2 solutions. We've started to look into that, and other kind of interoperable solutions. although that's very early days. Um, Legal, HR, you know, you name it, like basically wearing pretty multiple hats at the moment.
And at this point, Avantgarde, is it mainly tech heavy organization, or you have a lot of business hires and business team overall?
No, so I'm the only non-tech hire that works full time. There's somebody who worked with us part time on the biz dev or communication side until recently, and will start again soon. But yeah, apart from that, you know, the priority has always been tech on our side.
Hmm. And the main focus is essentially building out integrations, improving UX,
Increasing the asset,
bringing more increasing what? Sorry.
increasing the asset layer, so making a ton of different assets available from plain vanilla tokens to derivatives. By derivatives, meaning anything from interest-bearing tokens to uh, baskets like, you know, balancer pools or anything that derives its value from other underlying assets.
And you see a lot of demand from the asset managers in those new assets, or you kind of like have to do proactively a lot of education?
We see a lot of no, we're seeing a lot of demands. I mean, we don't I mean, that's one thing we don't have to do. Like, people usually find us, like, we don't need to do too much education. Where we found that we needed to do education in the past is more about how to use the protocol, because it was never very easy to use. But hopefully, as time goes by, that we'll need to do less and less of that.
Yeah. Maybe we can also talk about the parallels between your job and Goldman, and also kind of DeFi, and how do you see from the finance professional the space that's like emerging in front of our eyes in the last couple of years?
Yeah, I mean, it's okay. So the similarities are like obvious. Like, it's a very exciting, high adrenaline, fast moving pace, very similar to a trading floor in that sense. There's no 2 days that look alike. Like, every day has its own, you know, news flow, release drama, adrenaline. You know, you have to react fast. You have to be nimble. So in that sense, it's very similar to life as a trader. Um, and it's also similar in the sense that, um, or like maybe it's not similar in the sense that, um, you know, the Goldman type environment was mostly very mature. Um, so, you know, we generally speaking, there were XYZ products, and they weren't going to change very much. And it was really more about who had the most edge in those products and who could generate the most alpha in those products. In DeFi, you know, it's so once you kind of mastered those products, you know, your job was, I wouldn't say easy, but it was kind of predictable. And in DeFi, I feel like we're still very much at the cusp of, you know, some really big innovations, some really big changes, some really big growth. And um, and this is like kind of really exciting in a different way. Like, the learning curve is very steep. You know, every day we're learning about new technologies, still new types of financial products that are now possible. Although, like, the basics and the fundamentals still are very much the same, and some things make sense and some things don't. From a financial engineering side of things, like, unfortunately, a lot of things are also not making sense. But I think, like, um, in terms of opportunity, and in terms of opportunity to have an edge, an opportunity to grow, it's extremely exciting just because of the early stage of such a movement.
Yeah. And how would you describe the movement also in Switzerland? Is it a lot bigger in terms of where you started in a space like?
Yeah, definitely. Yeah, I mean, it's there wasn't much when I first started. You know, there's a kind of a few you know, there was like a few guys that used to meet up once a week, and you know, a few kids that were dropping out of university to start startups, and that was it. And now, you know, there's really like a whole scene. You know, there's like the law firms that are all crypto specialists. There's the you know, there's the meetups. Like, you know, I mean, in normal times you would have meetups every day in Crypto Valley, and always like high profile people. You know, you walk down the streets in Crypto Valley, you're always going to bump into, you know, in normal times again, like, you know, people that you recognize from the community, from the blockchain community. because they're always there. They're always going back and forth to do business. Almost, I would say, like at least 50% of all blockchain startups have some presence in Switzerland and Crypto Valley in particular. So it's definitely a great hub for learning, networking, making things happen. Maybe less so on the fundraising side. I would still say like you guys in the US are probably a little bit more exposed to kind of larger venture funds and capital flow. But in terms of knowledge and network, I think it's a very strong environment here.
Nice. And when you think about new founders joining the space for the first time, learning everything from scratch, like what kinds of things would you point them to, or like things they should avoid in terms of like some of the mistakes? Like how do you think about like giving advice to somebody who's just joining the space?
Yeah, I think like so for new founders, I mean the obvious one is hire slow, fire fast. Like having the wrong team around you can be very painful and very hard to undo. Pick your partners carefully, especially in the early days, especially if there's contractual ties to them, because getting out of those contractual ties is always a headache later. So making sure that you don't rush those relationships and that you really, or at least if you do, structure them in a way that it's a very, if it doesn't work out, there's a very clean break and there's a very nice way to end things. And yeah, and I think just basically being nimble, being able to react fast, being able to learn a lot, and being somewhat humble about what you know and what you don't know, and not being afraid to ask for advice and maybe afraid is the wrong word, but not forgetting to ask for advice when you don't have expertise in a certain thing, not feeling like you have to do everything yourself.
Mm-hmm. How would you go also about forming the team?
Yeah, so I mean, our team, I think at its peak was 12 or 13 people. So I don't have the same experience as scaling a team like other founders, I guess. But we did a mix of things. We met some people from hackathons. We met other people through headhunters. We met other people from word of mouth. I think, yeah, I think for us, we never really. It's not like we had one process. It was a bit of everything. And
Got it. And maybe we can also discuss briefly multi-chain asset management association, the association that you started. Like, what is the goal there, and how much time do you spend there?
yeah, so MAMA, which is the Multi-Chain Asset Managers Association, was founded in 2017 with the view to, what I saw happening back then and is still really fear at the moment is that the DeFi narrative gets overtaken or gets reproduced by incumbents, like because they're a lot more powerful, a lot more um, present when they have the ear of kind of more people than little small DeFi startups back in 2017. So the idea of Mama was really to provide a voice for DeFi towards regulators, towards governments, towards consultation papers, and really kind of start to lobby or start to represent DeFi in a unified voice, and specifically on chain asset management. And like I still think it's a really important association. I'm still very involved in it. I think it involves at least 2 to 4 hours of my time per week, and sometimes more, depending on whether we're responding to a paper that needs my attention or something. But basically, yeah, we're increasingly seeing just because we're part of a lot of discussions at a sort of higher level, how incumbent banks and financial intermediaries are definitely very scared of being disrupted, and so very often they tend to try and put up blockers towards innovative startups working in DeFi because they feel, well, why do we have to have all of this regulation? Why do we have to be held to such high standards? And then these DeFi guys come along and basically do whatever they want, right? And so this is something we want to fight back against, in a sense, and say, well, hang on a second, this is the way the world is moving, and why don't you guys actually just get up to date, instead of, you know, whining about it. So it's really like, that's kind of in a nutshell what we're trying to do, like kind of even the playing field a little bit more, just a little contribution on our side. We have about 50 members now, which are all companies, mostly companies, sorry. And yeah, just kind of trying to level the playing field a little bit with those large institutions and trying to create a small but hopefully increasing that voice every year with the work we do.
And do you think regulators understand the space pretty well at this point in time, or there's a lot of education that's still required, and also other geographical differences, you would say?
Yes, regulators understand the space very well, like scarily well. And but also, I don't think much change is going to come from the regulators themselves. It has to be driven from a policy perspective, because they have no upside in being open-minded, because if things go wrong, they always get the blame. So really has to come from the top, that their mandate is to be open-minded with respect to these specific industries. But yeah, they definitely understand in quite precise detail what's going on.
And so, what is the best way to change the policy, to kind of change the direction?
So it's a great question. I think we're still figuring it out, and we welcome like new members and volunteers who can help us brainstorm that. What we've done so far is responding to all kind of governmental consultation papers. Like the European Commission puts out papers regularly. Um, the ESMA puts out papers, the UK government puts out papers, and we've been active and proactive on those papers in terms of providing feedback representing on-chain asset management. Also, we've been running a lot of educational initiatives from a university level and at workshops, sponsored by anything from raising our voice in the World Economic Forum to, conversations with the OECD to, being invited in by certain parties to discuss certain angles. So we really try to spread our wings as much as we have capacity for, and we're always open to feedback, as, our background is not in policy. But we have definitely got some high profile board members that can help open a lot of doors for us and have been very helpful to us in terms of trying to get out there.
Nice. And overall, how do you think the space will be evolving, or like what's your hope for the space overall for next couple of years?
I think it's going to be interesting. I think DeFi is, I mean, my view has always been that the killer use case for blockchain will be finance. Like from the beginning, I always had that view. So I think I would imagine that we continue to see a lot of innovation around financial products, a lot of new strategies, a lot of capital flowing in because the returns are better. But I also think we're going to have a lot of blow ups. And partly because there's a lot of people seeing that there is a bit of hype around and trying to launch things in a rush, not taking security seriously, not taking proper precautions, and also, by the way, not just on the founder side, but also on the investor side. And so I think it will be up and down, as it always is. That's definitely something that is true in traditional markets as well as new markets. But definitely, the speed at which things go up and down in crypto obviously is much, much more severe. I think that also I'm interested in looking forward to, how Ethereum 2.0 will evolve, how gas price, how, obviously gas prices have been a very big issue recently. How solutions like Near, I didn't mention it at the beginning, but obviously you know this, but, also have a board seat on the Near Foundation. So very, very excited to see how interoperability and how other blockchains will solve these problems, and how if and how the shift will the shift in assets from Ethereum will move across, and in what way. So those are some of the things I'm really excited about, and yeah, and I don't really have any concrete predictions, just that watching very closely and assessing, reassessing every few months or less, because it's such a fast moving space, is really necessary for founders.
And do you feel like that the space has become truly global? Like innovation is happening in US and China and Europe, or there are particular pockets that you're seeing as the ones where like majority of the innovation is originating from?
Yeah, much more global than it was 5 years ago, for sure, in the space. I think that's also a function of like better developer tools, better documentation, better community awareness, better tools in general, and better knowledge, and more developers, just full stop. So I think that yes, it's definitely becoming more global in nature. I could probably identify a few pockets, but I'm probably also biased. So I would just probably stop at saying, I'm probably biased with, the relationships I have or the groups that I'm close to, but definitely feels that there are some pockets, but I would say in general, the trend is much, much more global than it used to be.
Cool. Sounds good. And where do people can find more about you and Avantgarde online?
Yeah, I think the best place is probably Twitter. So we're Avantgarde with an EFI at the end on Twitter, and yeah, my Twitter is Mona El Isa, and also Melon Protocol. It's the decentralized, kind of core protocol for all protocol developments, release updates. Melon Protocol is really the one to follow.
Cool. Well, sounds good. Thank you for joining today for this conversation.
Thanks, Sasha. It was a lot of fun. Thanks for having me.
Hey, so thank you for listening. You can find more episodes of this podcast at openwebcollective.com. If you're a founder looking for help with product, go to market, or fundraise, apply on the same exact website. It's openwebcollective.com. If you really like this episode, I would really appreciate if you give us a review on a platform of choice where you listen to podcasts to. And finally, if you're on Twitter, we are at OpenWebFounders. Again, the handle is at OpenWebFounders. I'll see you next week.